Hey guys, Jules here, and today I want to talk about how to get started in the stock market and choosing your first stock. So the first step above all else, and I will always stress this, is to educate yourself. You always have to educate yourself when dealing with a new frontier, something that you might not know a lot about. And I'm going to be giving you a lot of information, but I just want to offer you guys some books that I've read that have helped me understand investing and the market and things like that. The first recommendation is The Richest Man in Babylon, and it talks about principles of finance and investing and how to build wealth, things of that sort. It's a good read. It's a short read, so I would recommend it. The next book I would recommend is Trading for a Living. I actually listened to the audiobook on YouTube. I will put the link in the description to this. It was also a really good listen, and it kind of just reinforced concepts that I've learned over time, but it's good to have it reinforced and coming from a knowledgeable source. And of course it might seem a little basic, but Options Trading for Dummies, I actually read through this, and again, it just reinforced things that I've learned over time and that I've put into practice. A lot of information is condensed all in one place, and it's a good read if you're already well versed in the stock market and you want to learn more about options. And just a quick disclaimer, this is not financial advice. I am not a financial advisor or consultant. All of this is just my opinion, and do not invest anything that you cannot afford to lose. Cool, let's keep going. The next step is to choose your broker. Like I said in my previous video, I use Robinhood and Thinkorswim, and I think Robinhood is very good for beginners, especially if you're not trying to day trade and trade often. Robinhood is fine to buy and hold. It's fine as a starting point. The UI is very simple and basic, and the app runs well enough on the phone. Thinkorswim is a lot more technical. If you want indicators, if you want real-time, up-to-date trades, Thinkorswim is really good, and I would very much recommend it. If you want to day trade and options trade and be more technical, Thinkorswim is probably what you want to learn on. Robinhood and Webull are fine for the most part. If you don't like Robinhood, you can download Webull. It's another app that is free, and there's no commission trading on either one. So there's something called the PDT, which is the Pattern Day Trade Rule. If you go over 3 day trades in 1 week or in 5 trading days, your account will be flagged as a pattern day trader. What a day trade is defined as a buy and a sell of the same stock on the same day. So if I buy 1 share of Apple and I sell a share of Apple, that's 1 day trade. Generally, if you're a beginner, you're going to be buying and you're not going to be selling. You're not going to be doing much. You're going to be buying and just holding. You're just going to chill. If you want to get into day trading and swing trading and things of the sort, you have to know about the PDT rule, because if you do more than 3 day trades, your account gets flagged for 90 days and you cannot day trade for 90 days. You kind of have to use your day trades sparingly, like in very smart ways, and we're going to talk more about that. However, there is a couple of ways around the day trade rule. If you have over, and you can see it on the screen right here, if you have over $25,000 in your stock market account, you can trade as many times as you want. There's no restrictions. The other way around it is if you have a cash account with Thinkorswim, basically you can day trade, but the sum of your trades cannot exceed your total account value. So if you have $1,000 in your account, you can day trade, let's say $100 10 times, right? So I can buy 100, sell 100, buy 100, sell 100. Or you can do $500 twice, right? So the amount of your trades cannot exceed your account total. So Thinkorswim gives you a little bit of leverage to grow your account quickly. The next thing to do is figure out your starting amount. Figure out what you're comfortable putting into the market and not having access to for who knows how long, right? Maybe you want to leave it in there for 2 years, 3 years, right? So if that's $100 for you and you're not going to miss that money, start with 100. If that's 500, if you can spare a little bit more, cool. 1,000, I think 1,000 is a perfectly fine starting amount. I think 500 is a perfectly fine starting amount. Less than that, it's going to be hard to really see too much like growth. You're not really going to notice that much, but any starting amount is perfectly fine. Just putting the first step forward with investing, right? Because time is your ally. The earlier you start, the more growth you will have in the long run. So starting earlier is very important. So even if it's $50, it's a start. And if you can add $50 every week or every 2 weeks or every month, that's a start. It starts compounding interest and compounding in value. So this is how you build wealth. Actually, you should set aside an emergency fund before you start investing. You should have 6 months of your expenses saved up. So let's just pretend, you lose your job tomorrow, the stock market crashes tomorrow, you still have your 6 month safety net, right? And I know that's hard to do. Everyone is in a different situation. Ideally, if you can do that, that would be the best. And then start investing. Because then if things go south, you still can survive for 6 months without worrying, without touching your investment money, and you have a couple of months of a cushion to figure things out if you have to move or find another job or something like that. If you don't have a lot of expenses, if you're living with your parents, maybe you can afford to invest without the cushion, because you already have that cushion with family or whatever else. And whatever that number is for you, whether it's 100 or 500, don't dump it all in at once. Do like 30% of it, like 1 week, see how the market reacts, and then put a little bit more, see how the market reacts. Because if you put all of it in, what if things go down? Now you're not going to have any money to capitalize on that dip. So you want to put a little bit in, see what happens. Put a little bit in, see what happens, and kind of keep feeding it. But if you put a big chunk in, now you have nothing left, right? So if the market dips, you cannot capitalize on that dip. All right, and now we're up to the fun part, picking your first stock, right? So I have a couple of picks that I think are pretty safe. Square right now is on a really big dip. If you can get it below 210, I think that's a steal. Even below 215, 220, right? Because it was in the 260s not too long ago. 250s not too long ago. It even almost touched 270, right? So I think this stock is going to bounce back up. Now is the time to get in. I think Square is a great company. They're a financial company. They're thinking about opening up a bank soon, like becoming a lending institution. So that's going to give them more leverage. They bought I believe it was 50 million worth of Bitcoin. Yeah, Square bought 50 million worth of Bitcoin in October. So that means that they're looking towards the future, right? They're looking at crypto to help them with their banking. And obviously Bitcoin has doubled since 2020. That 50 million investment has considerably gone up. So companies that I think are good for beginners that you're just going to buy and hold and not touch, I think you can't go wrong with Apple. Apple has one of the highest market caps in the business. They also pay dividends, which we're going to talk more about later, but I just think they're a very safe company. Their price does not fluctuate that much, and they have a very steady growth, right? So if I look at the 1 year chart, we're looking at, it goes from $60 and now they're at 120, right? If I go to their 5 year chart, it goes from 23 up to 120, right? So that's like a factor of 6, right? From $20 to 120, you're multiplying your money by 6 in 5 years. That's not bad. So Apple is very, very safe in my opinion. Bank of America, very, very safe, pretty stable, unless the banking market crashes. Generally, they fluctuate anywhere. They were between 20 and 25, and now they're actually at a high right now. So I would be careful entering, maybe wait for them to go down, but they're pretty stable. They also pay dividends as well, so it's worth holding. Coca-Cola, KO is the ticker symbol. And obviously Coca-Cola has been around longer than most of us have been born. Obviously they had a big dip when everybody else had a dip. They're pretty safe. I don't think they're going to go bankrupt anytime soon. They're a really good buy and hold, and they pay dividends as well. I think American Airlines is great. I mean, they're going to get bailed out by the government if, things go south again. They dip down to $9, but if we look at their history, obviously because of coronavirus, airlines are all down, right? Meaning that now's the time to get in on them. I actually bought in around $11, and I'm still holding American Airlines, and they've doubled since then. They're sitting at about 22, and I'm holding until they go back up to like 40 and 50. Depends how regulations go, how fast everyone's going to get vaccinated, and how quickly travel opens up again. But I think this is like mid-level risk, and I think it's worth buying into for a growth play. NIO, NIO is the ticker symbol. This is basically a direct competitor to Tesla, at least in the electric vehicle sector. I know Tesla is more than an EV company, but just in terms of EVs, this is China's version of Tesla. Basically, they have a really interesting business model. They're backed by the Chinese government. I think that the only thing that can really interfere with this is US and China's relationship with each other. If that gets more rocky and policies get enacted and put into place, that can probably hinder NIO's price on the market. I think they're a solid company and they're only growing. I'd be happy to show more fundamentals in the future, but I think they're at a very, very good price. And if you're a beginner and you want to take medium level risk, definitely jump into this one. I'm very bullish on this, and this is a big part of my portfolio. I think they're going back up to the 60s. They're at a very, very good price right now. So this is going to be controversial, but I do think that AMC will go back up. I think they've reopened theaters in New York, and I think they're reopening in LA, at least limited openings. But I think once this whole corona situation is over, I think people are going to miss going out. They're going to miss eating at restaurants and going to the movies and traveling. And I think once AMC opens up 100%, I think we're going to see a bit of a spike. So this is not something I'm going to be holding extremely long term, but I've been holding it since about $3, right? They were at $2.50 for a while. I think when they open up, we can see 14 again. 14 is not uncommon for them. It can probably go higher. I'm probably just going to sell around 14 or 15 or so. This one is probably the most risky play that I'm telling you guys, so take it with a grain of salt. Ethereum is part of the crypto market, and I think it has a lot of room to grow. Obviously, Bitcoin is the front runner right now, but Bitcoin is so inflated right now, and I do think it has even more room to grow further, Bitcoin, because Tesla just bought a whole bunch of it, Square bought a whole bunch of it. Everybody's buying crypto. All these banks and financial institutions and tech companies, they're all jumping on the crypto wave. And on Robinhood, you can buy fractional shares or fractional portions of crypto. If I go to ETH, you have to unlock this feature on Robinhood, but you can just unlock it. ETH, you can buy some Ethereum and hold it. It has a really good curve. In the past 3 months, it was at $700 3 months ago, and if we look at the yearly curve, it's beautiful, right? If you bought it a year ago at 150, you've kind of like almost 10x'd more. You've more than 10x'd your money. Ethereum, I think, still has room to grow. I think it's a good pick to just hold. So if you enjoyed this video, please give it a thumbs up. I'd greatly appreciate that, especially if I've been able to educate you and help you get started on your investing journey. Also, consider joining our Discord group. We have a lot of people that like to talk about stocks and like to educate others, and a lot of great minds in there. So definitely click the link in the description to join. And if you have any questions for me, you can do that too. I announced some of my plays. I actually announced a pretty sick square play this week. It's a good place to just go and hang out and learn a little bit more about this stuff. I know it's probably overwhelming, but you will get the hang of it, trust me. Also in the description is my referral link to Robinhood. If you use that link, we both get 1 free stock. So definitely use that referral link in the description. If you haven't made a Robinhood account yet, leave questions in the comment section. I will answer them all to the best of my ability. Thank you guys so much for watching. I will see you all next time.